in December of 2012, my mom and dad were on vacation. My dad literally woke up one day, had a heart attack, passed away. And I watched my mom just how she couldn't handle the finances, and I'm not even talking how to invest. I'm just talking about the daily finances of paying her bills and, was this a real bill and did they put it through insurance, all the things. And I helped her with that, as well as my brothers. And obviously that's one area that's important. I've been in finance my whole life. I've been a CPA for over 20 years. Shortly after that, I went through a divorce, and finances was everything. Finances and kids was everything through that. And that was in 13 into 14. And at the end of all of that, we had to put my mom in assisted living, and we literally made probably every mistake. If anyone ever wants to write a white paper, just interview me. You'll learn everything not to do. We bought on price. We didn't know the questions to ask. We didn't know what to look at. We didn't understand anything. And from that, I created the model that I'm going to show you, which is really how do you look, an in-depth look at your current situation, living at home and maybe having some help at home, versus what would it be in a retirement community. And one of the nice things is you can actually look and say, well, how much help could I get at home versus if I go into the community to kind of break even. But it helps you buy on what I would say, buy on knowledge, not on price, which I think is very, very important as well when it comes to all of this. So I'm going to share my screen. I'll walk you through the model. I do have a fair bit of numbers. I'll try not to go too in depth technically with the numbers and the taxes and everything, because I do want you to listen and not get bored. So I will try to keep it relatively high level, but it will give you a feel, and I can make this a little bit bigger. So one of the things when we were looking, they said to us, hey, it's $7,500. And we looked at each other, my brothers and I, we said, well, the other one's $7,200. Why don't we go there? And we really didn't understand what we were doing. We didn't understand the questions to ask, what to look at in the facility, the rooms, what are the add-ons, what is everything that comes with that. So that was mistake number one, obviously. But most people, what they're doing when they are evaluating is they're saying, okay, it's $7,200. Her mortgage, my mom's, was roughly $3,000. That's a $4,200 difference. What's going on? Or if they, thinking a little bit more depth, they might look at how much is all of the housing. And that's what this section is over here. We run through all of the housing, what's going to change in your housing. And you can still see there's a fair difference in that, So in my mom's case, with everything going on, there was about $4,500 being spent. Again, she's going to keep her cell phone. She's going to pay for that $7,200 in the retirement community. There's still a pretty significant difference, almost $3,000 here. For many people, they may go from 2 cars down to 1 car, so that can be a savings, but that's the kind of thing that you need to look at to understand what is your current situation, what is your future situation as well if you move into that community. A lot of people will think about, I pay for groceries now. I still want stuff if I move into a community. I still want stuff in my room or in my apartment. So there will still be a cost. But again, that can be a pretty significant change because generally you're eating your meals at the facility where you're staying at that community. So I'm going to run through these things from a budget perspective pretty quickly. I think everyone will get the gist. Entertainment, I kind of just lumped it into dining. You might be going to movies, you might be going to the theater, but a lot of these things are happening already. Your entertainment, your friends, your socializing can be happening in the community. And so most people, it's going to drop pretty significantly from what they might be spending on their entertainment. Insurances are going to change as well. If you have a home, you could be spending, $2,000 on a homeowner's policy. If you have a renter's policy, you could be spending $20 to $35 on that. So again, some things can be changing pretty quickly. If you're going down from 2 cars to 1 or potentially getting rid of them, your auto insurance is going to change. If you have an umbrella policy, most people actually that I've worked with get rid of the umbrella policy. They don't seem to need that in the end. This is an area, the home care expenses is an area where I find some people forget about, but at the same time, this is that area I was saying you can kind of play with to compare. So somebody maybe, getting 20, let's say it's 25 hours of care at home a week, they can put everything into the model. You'll see at the end, they can look at what the difference is, and they can say, oh, if I up this many hours, maybe I want mom to stay at home, or maybe it just doesn't make sense, and again, you can use it to educate yourself. But this may go away completely if you move into an assisted living community, but at the same time, there may be, add-on services that you get as well. And this was a big one from our perspective that we didn't know to ask the question of what all is included. So just looking at it from a budget perspective, and again, I ran through that pretty quickly, it still could be a pretty sizable difference. In this instance, it's roughly $1,000, just a touch over. And this is, I find, a pretty in-depth look already. Many people are not going nearly this far. But then what I added over and above all of this was looking at if people own a home, what happens with the home, what happens with the deductions, how do your taxes play in? And at the end, I'll actually talk a little bit about long-term care as well when it comes to this. But I took, for example, again, depending where you live in Chicago, I have done this in a couple different states, but if you have a home, let's say of $650,000, you may still owe $250,000 on it. If you sell this home, you're going to have closing costs. Closing costs are generally about 8%, 6% on the commission, about 2% on all the other closing costs. So what you have here is about almost $350,000 to invest that will offset what your cost is when it comes to paying for this. If it's wrapped up in the home and you've got equity in the home, you can't invest that and offset. So obviously this would need to be a sale of the home that would take place. And I'll get back to that on the other side. And then I look at your actual tax return and I look at what are your deductions, what is your filing status. There's several things, again, I'm not going to go into too much depth, but these are things that will help me understand, are you losing deductions? How does it play in? You might be capping out right now because, for example, your state and local tax has a 10,000 cap, but for example, there you may not cap out, or you may just have a different deduction but still be able to deduct. So it can get pretty kind of intense and complicated when it comes to that. This is all what I would say is the raw data. This is what I work with once this is all compiled. Much of it filters into my analysis sheet. This is the top part that we looked at together. Again, I will come back to the long-term care. But again, you can see there was about $1,000 difference. We spoke about selling the home, $350,000 to round it again. At 5%, again, we can play with that number depending on how aggressive or conservative somebody wants to be, would bring in a little over $17,000. You're going to pay taxes on it. You're going to end up with potentially about $1,000 a month. On the other side, so this offsets your payment, right? This is like a gain, so to speak, in cash flow. But on the other side, you're going to lose some deductions as well. And I will look at that. This comes from your tax returns and see where you are, how you're filing, what is your itemized, or are you taking the standardized? This all plays in. In this illustration, again, these are pretty accurate numbers for some of my clients, but it's not from a specific client, it's himself or herself. The estimated in this was losing roughly $400 over there. So putting kind of a summary together, the all-in, if you move into, in this case, it was an assisted living facility, would be about $9,400. You have to add in the almost $400 that you lose in deductions. You do offset it by about $1,000. So your total kind of cash flow out of pocket on the monthly basis would be around $8,800. Again, I'm going to round and keep it fairly high level. What we looked at from the budget perspective was about $8,400. So you're actually, in this case, your community costs are about $388 more than if you stayed at home. So again, you could say, I'm going to make the numbers easy for me. If it's $20 an hour for somebody coming into my home, what would I do if I had another 20 hours? It would even out. It would be even, it would be roughly equal. because that would add $400 a month. Is that worth it? Or do I want the community environment where people, you know, are there 24/7? My mom's not in the car as much, whatever it is for you, but you can really evaluate and see, do I, you know, for some people they want mom at home, for some people they want them in a community, but you can really do it on where you are and your educated guess, as opposed to what we did was literally just go by price. So the one thing that I said I would come back to is the long-term care. And I'm going to throw a number in here. The reason I really leave this till the end, I find, I don't know what it is, 5%, 10% of people have long-term care. And of those 5 to 10%, maybe 5 to 10% actually understand what their long-term care is all about. So, so this really doesn't play in very often. But, you know, again, just taking $500, you can see it actually ends up being where you would be paying less if you move into your community as opposed to if you stayed at home. But again, now you can really make those educated decisions. What is really best for my mom or my dad, or if it's a couple. But again, as opposed to a knee-jerk reaction where we started was, you know, 7,500, no, 72. Her mortgage at roughly 3,000. Oh my gosh, there's, you know, $4,200 difference. This is crazy. It's really not that $4,200 difference, that knee-jerk reaction or that sticker price shock, you know, that people sometimes get. And so this has been very helpful for people. Would love to hear thoughts, comments, questions, anything that you have, would love to hear them.